Hey everyone, John Henry here, slingshotfutures.com. Today we're going to be taking a look at a little bit of a different kind of view, and that's looking at the bigger picture of the markets. What's the anticipated movement? You know, the market's getting, well, we came into the markets this morning with them getting obliterated. They're bouncing back a little bit. But, you know, looking at this overall picture, what's kind of the overall idea? What's going to happen, or at least what do I think is going to happen? Is this a market crash, right? So one of the first things that really stands out is simply the fact that, yes, the markets have had a pretty heavy sell-off. Is this a market crash? No. Right now you're looking at a monthly chart of the S&P, or the SPY in this case, and you can see the pullback that we're going through right now. Not much, right? There's not a whole lot to it. This is not a market crash, right? Look back at 2008, 2009, that's a market crash, right? That's a heavy drop to the downside. Now, in this type of circumstance, are we in a market crash? No, I think this is a healthy correction. We had the same thing over here, had the same thing right here, had the same thing right here. We've been going up since 2009 really started. I mean, it's been nothing but straight up. In 2009, you know, not factoring any splits or anything like that, we're looking at the SPY putting in a low of about 66, well, we'll just say $67, and now it's currently up to almost 300. Now, again, that doesn't factor splits or anything else, but that's a big move, right? That's a ginormous move. We're at all-time highs. We're coming off of the all-time highs. And yeah, there's a lot of fear and all this other stuff going on, but is this really a market crash? No, not really. I think this is a healthy pullback, and I think there is a little bit more to come. I don't think that this pullback is done, and I think it could go a decent amount further. Now, a few factors that really stand out to this. First of all, it's not the end of the month yet, okay? We're looking at a monthly chart. It's not the end of the month yet, but this is a big old bear bar. And whenever you have a huge bear bar like that, one of two things is going to happen. The market's going to bounce back and end up giving you a candle that looks like this bear bar, or it's going to close nice and strong like this and potentially create a major level of support. Now, the major level of support, wherever it happens to be, is going to be the low of this bear bar. Whether it closes weak, strong, whatever. Wherever the low of that candle ends up being, that's going to be the structural area that needs to break down if the bears are going to take over. Now, I say take over. That could be short-term, long-term, not completely sure. Right now, as it stands, November's not looking like a great month in terms of the buy side. But, you know, overall, it depends on how we close and where that low is. Because what we really need to see here is if we create a big old blow-off candle like we have right now, and it continues, it breaks underneath the low, and really shows conviction to the downside, that's a little bit of a problem. That could create a situation that is a little bit scary going into November, where a lot of the buying pressure may subside, and we may be looking for a decent bear market. Now, along with the bear market, what are a few other things that kind of gives us a clue in, you know, why that level is so important? Well, if we look historically, generally speaking, when we have a huge blow-off candle, here's another good example, this bear bar, that low is going to be a monster level of support. And if they can break through it with conviction, then there's a good chance that we continue to the downside. But if they fail, that is a sign of a pullback and a continuation. Another example, if we go back a little bit further, here's another big blow-off day, or blow-off month rather. Drop the low, guess where we found support. You kind of get the idea. Let's go back a little bit further. Here's another really big one. Notice what happened when we broke underneath it. Everything let loose, right? It started collapsing, the market crashed, and everything fell apart. So really, a lot of this is hinging on how this month ends. A lot of people are going to be paying attention to how this month ends. Another factor is that we have a potential negative divergence off of the highs. Now, I'm not a huge fan of divergences by themselves, but everything's stacked up together in the sense that we have a monstrous leg to the upside. This is way overdone to the highs, and now we have a situation that's getting even more aggressively ripped higher. We have one of the biggest moves on the month at the end of a giant trend like that. That is the definition of exhaustion. Usually when that happens, you're looking for this high to break, and if it breaks, market needs to stay above that, and if it doesn't, that spells a little bit of trouble. And right now, it's not doing so great at that, and we're pulling down pretty aggressively. Along with this, let's take a look at the UVXY, or any volatility index. What do we have? Well, we just went through a 1-to-5 split, and we have a big jump to the upside. Now, what usually happens when you have a big jump to the upside? The next month continues its volatility to the upside, and it absolutely collapses. Now, what does that mean? Well, if the UVXY is going up, that is bearish for the markets. If the UVXY is going down, that is bullish for the markets, or it's just simply expiring because of time decay. So that's something that we really need to factor into here, because now we have a situation where we're ripping really aggressively higher. Chances are, and the reason why I think that November, or at least the beginning of November, maybe even towards the end of December, not the end of December, but the end of October going into November, and then the beginning part of November could be led with more bearishness, is because it would not be a surprise at all to see this catch another leg to the upside. And if the UVXY is ripping aggressively higher, chances are the market's not doing so hot. So really what I'm looking for here is a continuation move to the upside on the UVXY that could go as high as $80 to $90. Now you better believe there's going to be a lot of people who want to buy some puts up there, but that's the idea, right? We could be looking for a strong bull close on the UVXY going into October, and then a continuation spike to the upside that inevitably rolls over towards the end of December. And if we have that situation, well, we look back at the SPY, that would mean that we have a continued downtrend that's working its way lower, that then eventually works its way back up, right? So that's kind of what I'm anticipating here for the bigger picture on the SPY and most of the indexes, really, is that I'm anticipating a further corrective phase. I'm looking for the end of the month to continue on its way down, and I'm looking for the beginning of November to potentially continue that downtrend as well. Now, could this be the beginning of another market crash? Sure. It could be, but is it possible that maybe this is just a correction in a strong bull market? That is equally as likely. So really what we have to do is we have to look at this and hedge ourselves on both sides of the fence. We could be looking for a dip play. Maybe you're a stock trader who likes building a dividend portfolio. If the market does continue to dive lower, what a great time to build into long-term portfolios while it's cheap. Right? Where else could you buy things back in 2008 when Ford dipped down to $1, right? Where else can you buy stocks that are that cheap that are still good companies? Now, maybe Ford's not, but you get the idea. That's the type of mentality that you have to approach it with. Sure, maybe you're looking for a put that you can buy in the option market to drive the market down in the short term, but it is also a long-term opportunity that could be arising to allow us to buy more on a bigger dip. If the market does dip lower, it's probably going to happen relatively slow, as it has all the time. Now, we're looking at a monthly chart, so slow in the mindset of a monthly chart. But every time we've had a big bear bar off the highs, it's usually been short-lived, right? Even historically, this is back in 1999, right? We had a big old bear bar, popped right back up, and this is after a very extended trend. We had more extension to the upside, and notice, we really didn't have any giant drop days until over here, and even those bounced back before continuing lower. We have another drive to the upside, and kind of a small-ish month to the downside, and then it really blew off, and then again, that low is where it becomes important. So really, everything kind of hinges off of how October wants to close up. It's going to be a very important month. So really, I think the big thing that we need to be paying attention to is that this is very likely just a healthy correction in an otherwise very strong trend, but there is a possibility that this ends up getting a lot worse going into the end of October, into the beginning of November, maybe even through November. Got to play it on both sides, and we have to be prepared for either outcome. Right now, though, it looks like this is in dire need of at least a pullback. We haven't had a pullback really for a long period of time. I guess you could call this a pullback, but that's barely one. I want to see a corrective phase, right? I want to see a pullback that actually gives buyers something to get into, sink their teeth into, because I don't know about you, but trying to build a long-term portfolio right now while everything's at a monstrous premium has been tough. You know, it's hard wanting to buy, Disney as an example when it's sitting at $120 when you could have bought it at $40. All of these big companies that they're just so expensive right now. It's really tough to want to jump in. And I think a lot of people just have that same problem. They've already got the portfolios built. They've been building all year, but they're edging off the gas pedal a little bit. And the primary reason, because everything's too expensive. When everything's too expensive, the market's naturally going to want to correct back down. So again, just kind of in a recap, the anticipated move for me personally is that we see a decent corrective phase. Could be back down to around the $220 to $200 mark on the SPY, where we then see a reversal back up towards all-time highs challenging the $300 mark. Maybe I'm right, maybe I'm wrong. I'm sure I'll get comments on the video in a year from now saying you're an idiot or, man, you're a genius. We don't know yet, but we'll see as the market comes. I know for me personally, I am looking for at least a healthy correction down to a minimum of $240 on the SPY, preferably back down to $200 so we can get some better pricing in an earlier area of congestion. Either way you play it, though, just make sure that you're ready for any move that happens. You don't want to be caught off guard. So always, like we say, make a plan, trade the plan, follow those rules. You should be okay. Hopefully you found it interesting. Hopefully you found it useful. Maybe a little bit entertaining and something that, you know, you can mark on your calendar to remind me in a year to call me an idiot or call me a savant. But one way or another, it'll be something interesting to keep our eyes on. As always, underneath the video, click on the like button, subscribe to the channel so you're notified when these videos comes out so you don't miss anything important, and of course, to make sure that you get notified, because the YouTube algorithms are a little bit kind of weird, make sure to click the bell icon as well to the right of subscribe so that you're notified when they come out so you don't miss anything. That's going to do it for this one. I hope you had a fantastic trading day today. I hope you have a phenomenal trading day tomorrow, and we'll see you in the next one. Thanks.